Hi, I'm Tim Clarkson from Oxygen IT. I run an IT company, and for years I had the same problem you probably have. The numbers that matter were scattered across Xero, spreadsheets, and our job system, and by the time anyone pulled them together, they were out of date. So we built the CFO dashboard. One file, every number, straight from Xero, with industry benchmarks built in. Over the next few minutes, I'll walk you through it, using a demonstration company, and show you exactly what you would see for your own business. What if you could open one file and know exactly how your business is really performing? This is the CFO dashboard, one self-contained page, fed straight from Xero, with no spreadsheets to maintain. The headline here is adjusted EBITDA, not the raw number your accountant gives you, but earnings normalized for shareholder salaries, which is the number a buyer would actually price. For this example company, that is $275,000 on just under $2 million of revenue. Below it, every key measure at a glance: EBITDA, net assets, revenue growth, gross margin, cash, and runway. And the best part is the plain English summary underneath. The dashboard reads the numbers for you and tells you where to look next. This is the profit and loss tab, built on a rolling 36 months straight from Xero. Pick any period you like: last month, last quarter, the financial year to date, or a custom range, and tick compare to see the movement against the prior period or the same months last year. The trend chart shows revenue, gross profit, and EBITDA month by month, and the waterfall walks you from revenue all the way down to EBITDA so you can see exactly where the money goes. One thing to note, every number on this page is reconciled against Xero's own totals on every load. If anything ever drifts, the dashboard tells you, rather than quietly showing you a wrong number. Here is where the P and L gets honest. Product profitability shows gross margin by line, exactly as your chart of accounts maps it. Cybersecurity at 99%, managed services at 84%, and yes, professional services showing negative, because all the service wages sit in that line. The dashboard does not hide that. It explains it. The expense donut breaks operating costs into clean categories, so you can see what is really driving overhead. And at the bottom, the scenario panel: drag customer growth, churn, or new monthly recurring revenue, and watch EBITDA respond instantly. It turns, what if we grew 5% from a guess into a number? Same profit and loss, different lens. One click flips the P&L from the standard Xero layout into the True Methods LER view. Direct labor comes out of cost of sales, owner's compensation and add-backs are separated out, and suddenly you can see what the accounts were hiding. Gross margin jumps from around 51% to 67%, not because anything changed, but because service labor is now managed as its own line. That distinction matters. It separates a pricing problem from a labor efficiency problem, and those need completely different fixes. Whatever benchmarking framework you follow, this is your P and L in your language, reconciled to the cent against Xero. This tab puts the two lenses side by side and scores the business against real industry benchmarks. On the left, the same period through both views. Xero is booked and the LER layout with labor pulled out. On the right, the scoreboard. Gross profit percent, service margin, direct and total labor efficiency ratios, net operating income, net profit percent, payroll as a share of service revenue, the rule of 40, and turning point. The number that tells you whether recurring gross margin covers your entire overhead. Every target is editable in the parameter bar at the top, so this scores against your goals, not someone else's. Green ticks where you are on target, red crosses where the work is. Financials only tell half the story of a services business, so the dashboard pulls in operational delivery data too. Our example is an IT company, but the same idea applies to any recurring service. On the left is RHEM, reactive hours per endpoint per month across almost 4 years. The dashed lines mark the bands. Under 0.25 is excellent, up to 0.5 is okay, above that is a concern. This example is sitting just under 0.3, inside the acceptable band with room to improve. On the right, average income per seat and seats under management. You can see seats growing from the high 300s to over 400, while income per seat climbs past $200. Fewer tickets, more seats, better pricing. That is the operational engine behind the financial results, all on one page. Here is a chart every business owner should look at monthly: client concentration. Each bar is one client's share of monthly recurring revenue, with a hard line at 15%. The rule of thumb for salability. In this example, the largest client sits at 16.2%, so the dashboard paints it red. Not a crisis, but a flag. If that client left tomorrow, it would hurt, and a buyer doing due diligence would price that risk into your multiple. Everyone else is comfortably under the line. This single chart turns concentration from a vague worry into a managed number, and it updates automatically every time the data refreshes. The Revenue tab answers 3 questions: how much, from where, and is it growing? Pick a financial year, and the dashboard compares it against the same months last year, so a part year is always a fair comparison. The trend line shows all 36 months of revenue. The bars break it into product and service lines, this year against last, so you can instantly see that cybersecurity is the growth engine, while one-off services drift down, which is exactly the mix shift a healthy services business wants. There is also a growth decomposition waterfall that splits the year-on-year movement by revenue type, so you know precisely which lines earned the growth. Revenue is one thing, customers are another. This card reads 3 years of invoice data and matches customers by name across years, so churn is measured, not estimated. Blue is retained clients, green is new wins. In this example, revenue churn from one year to the next was just over 5%, with 13 clients lost and 6 won, while total billing still grew. That is a deliberate consolidation story, fewer, larger clients. And below it, the scenario panel lets you test volume, price, and channel shift assumptions against the actual year-on-year movement, splitting real growth into price effect, volume effect, and everything else. It is the difference between hoping revenue grows and knowing why it does. Where does the money actually go? The cost centers tab groups every operating expense into clean categories: marketing and sales, people and wages, technology, professional fees, premises and travel, and everything else, including owner's compensation and depreciation shown separately, so they never distort the picture. The trend chart stacks these by month across 3 years, which makes cost creep impossible to miss. A subscription that grew quietly, a hiring decision that changed the wage line, they all show up as a widening band. The category bars compare this year to last, so every conversation about cost starts from the same facts. When a category looks off, you do not want a summary, you want the detail. The drill down table takes any cost category and lists every account inside it, this year against last, with the movement highlighted. So technology costs are up becomes these 2 subscriptions are up $11,000 in about 3 seconds. Underneath, the cost scenario sliders model the common savings conversations. What does trimming consulting spend or renegotiating software actually do to EBITDA? The dashboard shows the answer in dollars immediately. It makes cost reviews shorter, calmer, and grounded in the ledger rather than opinions. Profit is an opinion, cash is a fact. The cash tab starts with the essentials: cash in the bank, operating cash flow, free cash flow, receivables, payables, and runway. This example is cash generating, which the dashboard states plainly instead of making you do the maths. The trend chart shows monthly cash flows by activity with the closing balance overlaid, and you can flip it to a quarterly view covering 3 full years. The breakdown waterfall shows the whole period in one picture: what came in from customers, what went out to suppliers and staff, and what was left. Receivables aging sits alongside, with your top debtors 1 click away. Every owner has had the 3 AM cash question. This answers it in daylight. The forecast projects the next 6 months of cash from your recent actuals, shown as the dashed line continuing the real balance. It is deliberately simple and honest. A trend projection, not a wish list budget. Then the stress sliders let you ask the uncomfortable questions safely. What if revenue dips 5%? What if customers start paying 30 days late? What if costs rise 10%? The dashboard recalculates the 6-month path instantly and tells you the lowest point and whether you ever run out. You get to have the crisis on screen, months before it could happen in the bank. 1 click switches the cash trend to a quarterly view spanning 12 quarters, 3 full financial years. Months are great for managing, but quarters are where the patterns live. Here you can see the seasonality of the business, the quarters where financing moved, and the steady climb of the closing cash line across the whole period. When you are talking to a bank, a board, or a potential buyer, this is the chart they want. A long, honest run of cash history in one picture, straight from the ledger with every quarter internally reconciled. No spreadsheet stitching, no copy and paste errors, just the record. The balance sheet tab gives you the position, not just the performance. Up top, net assets, bank, receivables, and payables from the ledger, working capital, and the current ratio. The comparison chart lines up 3 balance dates so you can see assets, liabilities, and equity moving year over year. The composition chart is the one owners love. Every major item on one picture, assets growing to the right, liabilities to the left, so goodwill, debtors, shareholder accounts, and tax are all in proportion. And below, the full statement with a movement column against the prior year. When your accountant sends the annuals, you will already know what is in them. Annual balance dates hide a lot, so the dashboard also tracks the balance sheet monthly, net assets and bank across 12 months, working capital shown 2 ways, including and excluding related party shareholder accounts because those are structurally different from trade balances. Debtor days is the quiet hero here. Ledger receivables converted into days of revenue outstanding, month by month. In this example, it runs in the mid-30s to low 40s, and any sustained drift upward would show long before it became a cash problem. Receivables against payables completes the picture, so you can see whether you are funding your suppliers or they are funding you. Last thing, and it might be the most important, trust. Every judgment call in this dashboard is written down. What is excluded from EBITDA and why. How the owner salary normalization works. Where the service delivery numbers come from. Each entry has a date, a reason, and who approved it. And the log lives in the source sheet, so it survives every refresh. Combine that with the reconciliation that runs on every load, checking the dashboard against Xero's own totals to the cent, and you get a number you can defend to your business partner, your bank, or a buyer's due diligence team. One file, every number, nothing hidden. If you want this for your business, let's talk. So that's the CFO dashboard, your profit and loss through 2 lenses, service delivery and financials on 1 page, cash forecast and stress testing, and every number reconciled back to Xero so you can defend it to anyone. If you'd like to see it running on your own numbers, book a meeting with us. Just scan the QR code on screen and it will take you straight to our contact form, or ring us on 08 002 42206. It takes about a week to stand up, and the first conversation costs you nothing. I look forward to showing you your real numbers.